Hi, everybody. Thanks for joining us today. Welcome to episode 5 of Spin Studios. This week, we'll get a venture capitalist investor's perspective on the Slack acquisition news. We'll touch on what investors are looking for when it comes to SaaS security, and we'll cover a few other items as well. Now, please let me introduce your host, Dan Barta. Dan, take it away.
Thank you so much, Jeremy. Really excited to be talking to you guys today. I know it's really been taking, the headlines everywhere. Everyone's heard about this Salesforce acquisition of Slack. It's, I feel like everyone's talking about it, and in all my group chats, people are texting me about it, where it's kind of the talk of the town. So we're really, really excited to be speaking with you, Najib, today, getting his perspective on what this acquisition means, why this happened, and then also talking a little bit more about what are venture capitalist funds looking for in SaaS or for SaaS companies and security companies. But first, Najib, I would love for you to just do a brief introduction. I know we talked a little bit, but I'd love just, what's the kind of the 30-second sum up of how you got here and, how you got to Sway Ventures.
Okay, sure. Thank you, guys. Thank you, Dan. Thank you, Jeremy. My name is Najib Khouri-Haddad. I am an engineer by education. So I started my career just by working the software and developing software. And over the years, I moved into product management, corporate ventures, which is in large corporations, combination of doing M&A as well as venture investing, before joining and starting a venture fund with a group of people I used to work with. So it's a technical background mixed a little bit with a business know-how, on the marketing side. And I believe that this is kind of the profile of a product manager in Silicon Valley, and that is a good base for someone in the venture industry to look at opportunities and where trends are going in the next few years and make some bets on them. So that kind of background helped me a lot in what I do today.
Yeah, definitely. And I think especially here in the Silicon Valley, because everything is so technology based, it does, pay to have that technical background. So, a little bit more about Sway Ventures, let's kind of just dive into, how old is the fund? How did it get started? I know you had mentioned that you kind of joined with a few other partners, but how did that start? What made you take that step into Sway Ventures?
So actually, we started that fund in 2013. And the idea by partnering with some folks that I used to work with is to build relationships with startups and entrepreneurs and help them with value add services, mainly consulting services around sales and marketing, and everything regarding sales and marketing and G&A. So when you think about a startup and entrepreneur, they want to build a product, so they want to invest whatever capital they have, hiring engineers and making some bets on the technology initially, and then taking it to market. But anything else which they have to do, finance, accounting, HR, those are things that they have to do, but they don't really want to staff up for doing this or using their own capital. So the idea is, let's work with those companies, offer them some of those services, mainly on business development and sales and marketing, which is opening up the door once they have a product or a prototype, and help them with introductions, with go-to-market strategies. So we did that for a while and worked with tens of companies around the country. And then we went and raised a fund based on this value proposition. So when you go to investors and say, we want to be another fund, there are many funds. And, for the last 20 years, there's a huge amount of dollars and new emerging teams that have come along. But what is the unique value proposition? Either you're going to focus on proprietary deal flow, great entrepreneurs or great minds or great engineers that you want to go and make a bet on, or you want to be able to provide capital with some differentiation, some value-add services in our case. And that played very well. So first, we honed in on providing those services for a fee to startups. And then we said, okay, let's go and raise a fund. And then now we look at opportunities with this mindset. If the management teams want us to be involved with a company, we can then help them in a variety of ways. Not only we have investing partners like myself, I am a general partner in Sway, but we also have operating partners and regular partners that have a wide variety of skill sets and experience in the industry. Some were marketing folks, some were ex-CEOs or semi-retired now, but they want to be involved in helping younger entrepreneurs. So I think we have a variety of skilled and seasoned executives that can be involved with a company and then help them and guide them. And in most cases, there is a value add that comes out of it. And for us as investors, we want to see this value add translate into customers, revenue, and in our case, that would translate into valuation uptick from the investment. And you know, it's a cycle that we look at in a way as a sustained life cycle management from the company when they come up with a product and a prototype, trying to position it, trying to pivot, trying to market to find the right product market fit, and try to help them through this phase. And you know, at some point in time, they'll need capital more than once. So we will be there, and we are there with them along the way. So that's kind of the thing that worked very well for us. You can see maybe a similar model with companies like Google Ventures. I think Google, when they invest in companies, they bring the might of the Google organization to helping the company by opening up technology that they have in-house or by training them. I think they finessed it quite a while. They have probably a huge balance sheet that they are using. The other VC that has been doing it, of course, yeah. And the other VC that has been doing it very well is Andreessen Horowitz. And Andreessen, they raise multi-billion-dollar funds. They can afford to have partners and operating partners to help out. So on our side, we were able to find the right formula to allow us at our size, because we are still an early stage VC, to be able to provide those services and give some incentives for the partners and the operating partners to help out, and for the companies really to benefit from this rich mix of experiences that we have in the team.
Awesome. Fantastic. You know, a lot of really good information. So one part that I liked, it kind of made me laugh, is when you said the people who are semi-retired. I think that's the dream of the Bay Area, to be semi-retired at a venture fund. I think that's the white picket fence, but for the Bay Area. But awesome. There's a lot of really great information. So, what kind of companies are you guys investing in? Do you guys have, you kind of said that you're trying to add a lot of value to them while also investing, but is there a certain technology stack that you guys are really, heavily invested in, or is it just wherever you feel that you can, give positive change, or what does that look like for you guys?
Okay. Sway Ventures is managing about $400 million that we have invested in 75 companies or so. And then we try to focus mainly on the Series A and the Series B companies. So typically that there is a product, there is maybe some revenue, and the team is looking to scale now and go to market. This is where we can help them the most. Now, we have invested also in earlier stage seed companies where we put 50K, 100K, or 200K into those companies. But really, most of the money and the focus is on Series A and Series B. This is when we invest between $3 and $10 million in a company and take 15 to 20% ownership, be on the board and have a board seat and maybe a board observer seat, and then be able to deploy essentially the resources that we have in the partnership to help out the management team. We focus mainly on software. We like software. We love software. Whether it's enterprise, mainly enterprise, I would say. We have some consumers, but 70% of the investments are enterprise focused. And within the enterprise, I think we have some key verticals that we try to hone in on. Fintech would be one. Health IT would be another one. Transportation and logistics, and PropTech, real estate. So we look at huge industries that have been there for a while and little innovation in them, and try to see how software can come in and turn them into something that is much more efficient. This is where we think we can capture market transitions and capitalize on that with companies that have software stacks, recurring revenue, SaaS models, and we like those. I mean, this is every VC wants to see SaaS revenues.
Right.
which is a little bit weird when you think about it, because if you have maintenance revenue, you're getting all the money upfront and you get maintenance revenue for support. But now you're translating into this big lump sum that you get upfront into something smaller that is distributed over time. But at least it gives you the recurring aspect of it. So we have some of the old kind of fashioned companies that are, all of them, whether it's Salesforce or IBM or SAP, trying to change their business models from that heavy maintenance upfront into something that can be amortized over time. And from the startups that we invest in, it becomes almost a prerequisite that you need to have this kind of model before we would be interested in investing in you. But typically, you are looking for those kinds of companies that has a heavy component, if not 100% software component in their offering.
Awesome. Yeah, no, and that makes a lot of sense. I think that's kind of the reoccurring thing here in the Bay Area. We have to be in software because we're in the Bay Area. It's that's what, they call it Silicon Valley for a reason. But that a lot of really good information there. So you said you were founded in 2013, correct?
Yeah, we started in 2013, and that is our first fund. That was about 100 million or so. And then 3 years later, 2016, we started the second fund. And now we are fully deployed in terms of new deals. We reserve some money for follow-on rounds for those companies, and we deploy them over the years. So we do that. And one of the other things that we do that is a differentiator for us, we allow our investors to double down on companies, specific companies, if they choose to. So when we lead a round on a company, or when we do follow-on rounds, we know what our LPs are interested in, what kind of companies, what kind of sector, and then we allow them to double down on a specific company, and we manage this money ourselves. I mean, they would give us the money, and then we pool it with a few investors, which means that when we lead, for instance, a $10 million round, we can put maybe $7 or $8 million from some of it from the fund, some of it from investors that would like to double down on those specific companies. And that it means a lot for investors and limited partners, because typically if you're dealing with a large fund, they won't allow you to do that. Essentially, you have to send them a check, and then you'll get statements on a regular basis afterwards. But you're not involved with the business, you're not involved with the portfolio companies, and you don't have really the capability or the option to double down on a specific one if you like a certain sector. So that is, in a way, we look at our ecosystem as more of a cooperative with our entrepreneurs, with our investors. We bring our investors sometimes to do some diligence on the companies before we invest, and sometimes they are customers of those companies. And over the years, I think we've created a great mix of portfolio companies and investors that mix with each other, that are in a way intermingling with each other through our partners and our partnership. So we feel that this is the best way of having a dynamic environment between investors, entrepreneurs, managers like ourselves, and our operating partners and ourselves, who are helping the companies on day-to-day hands-on operational issues.
Yeah, no, and I really like that. You're really giving the power to those. I like what you said about being able to double down. And I think that that's super important. Both you're trusting the entrepreneurs, and I think also from the startup side, you got to feel kind of nice, when they're, you have an investor that's saying, hey, I'm doubling down, and you're like, I'm coming in, and like, I have faith in you. So that has to also have a little added bonus to, those startups, because I've been in a few startups, and it does mean a lot when someone, is really ready to, fully support you. But that's fantastic. So about how many partners do you guys have today? And are you guys local to the Bay Area? Are you guys spread out throughout the United States?
We have our headquarters is in San Francisco, so we are based in the Valley here, and we have a team in San Diego as well, and a small team in Europe. We have one of our general partners is based in Sweden, and shuttle essentially between Sweden and London, and some portion of our fund is to be invested in European companies, European startups. where there is technology hubs, San Francisco and the Bay Area, a lot of enterprise companies, a lot of consumer companies. You go down south, whether it's in the Los Angeles area where there's a lot of media tech, and you go to the San Diego area where there is a lot of wireless, there's some security, and there is the health IT as well. So we have partners that essentially are deployed in all those locations. In a way, we are in a distributed group. When we meet, it has been mostly on Zoom. This is how we used to run our business even before COVID. We get together often, but then we are fairly dynamic. We need to be where the startups are. We go to their offices, we help them. So it's pretty much distributed on the West Coast. We also have a small team in Washington, D.C. Some of our companies, specifically the security and the cybersecurity ones, one of their target markets is the government, is defense.
Okay.
There is billions, tens of billions of dollars from the federal government that gets invested in IT. Actually, the federal government is the biggest IT customer
really
in the world. I mean, they spend maybe about $800 billion. So it's important for every startup to be able to access
right.
DoD, intelligence, the Army, the U.S. Air Force, and all of those organizations are bringing technology into their devices. Same thing that's happening in the industrial space. When you think about thermostats, when you think about electric grids, those are not static hardware devices anymore. They are smart devices. They are connected, which means they need to be protected with security. There is intelligence that you can get out of them. There is machine learning that you can extract from them, and based on that, have insights to be able to run them or offer services. The electric grid is a perfect example. It needs to be protected. You need to read what's going on the grid to tune your workload and generation. Same thing is happening with industrial machines, manufacturing. So software is getting into any kind of device. And that's why we like it, because there is all sorts of hardware devices out there, whether it's a car, and with autonomous cars, it's a car with software running it essentially, and smart grids and Internet of Things and smart light bulbs or smart cities. And an enterprise is becoming the test bed for a lot of automation. What COVID did, unfortunately, when everybody was forced to work from their homes, is to continue doing business, leveraging the internet, leveraging the cloud applications and the cloud infrastructure to be able to conduct business as you used before. And it's turning out to be much more efficient, much more productive than the face-to-face. And one of the things that you want to talk about with Salesforce here is Salesforce, their system is used for a CRM, it's customer relationship management. It's you're tracking your customers, you're tracking your sales, you're allowing your sales and marketing people to target and store information about opportunities and be able to transact on it. What they needed now, I think, in this COVID world is to collaborate, because your salespeople are not traveling to have a face-to-face and lunch where they used to treat their customers and clients. It's all done over Zoom or WebEx or all those collaboration. So you need to add an element of collaboration in real time to any transactional system. And I would think that this is one of the main reasons that Salesforce got into Slack, because Slack is one of the top 2 or 3 collaboration platforms that have been used widely even before COVID, but within COVID, it's becoming a dependency. It's a must to have. And whether you are using Slack or you are using Microsoft Teams, I mean, those are the 2 main platforms, in addition to things like WebEx and a few others like that are getting into this whole collaboration. People will have to figure out what is next. I mean, we all know what Slack does. Slack is building relationships and integration with different systems. You need that. You need first people to connect and collaborate. Second, you machines to connect and collaborate. I mean, believe it or not,
definitely.
The smart one, you're going to need to do that. And I think you're going to start looking at a world where there is a lot of automation, there is a lot of collaboration, there is a lot of exchange of information, And based on all this information, you can create a data stack, and then you can run your machine learning algorithms and your artificial intelligence to be able to transact efficiently. And that's really the world that we are moving into, even after COVID. A lot of people, I think, got used to working remotely, and a good portion of them will continue to do so. You already saw a lot of the big companies saying, even after COVID, we're not going to ask the employees to come back every day to the office. Maybe they can work 50% of the time, if not more, from their homes. And whether they want to live in high-priced area like Silicon Valley or be remote, we're going to allow them this kind of flexibility. But to do that, you need the technology, you need the infrastructure to be smooth, the user interfaces to be very fluid, I mean, so that they work consistently. It becomes an extension of how you're thinking, whether you are in a home setting or in an office setting. And those are the tools that you're going to need, essentially. Collaboration, a lot of the video, I think, is going to come in over time, because it gives you the perspective of knowing the person on a face-to-face, on a personal level. And the more you do that, the more you can, the transactional elements come easier afterwards. And, there is going to be an evolution of technologies and innovation that we are investing in as VCs for the next generation. I mean, a lot of people missed on Zoom. I mean, we have been using Zoom even before COVID, but, who would have guessed that it would take off the way it did? And
Right.
the company went off public and with whatever valuation they have today. But now you're going to have to figure out what's next, how you can integrate the Zoom into something more dynamic, how you can really look at the teachings that is happening in schools and all the critiques that people are generating with this kind of media. Is this the right way to teach kids this kind of thing? I think there are different technologies and evolution that will come that will make it simpler, easier, and the user interface more readily, more natural in a way. And you overlay on top of it the video capabilities, the 3D capabilities. I want to feel you that you are in my office, sitting on in the same room talking to you. And
right.
Whenever you think about big corporations and branch offices and staff meetings, you want to give this kind of appearance of you're all within the same room, even though you are in different locations. So I think this is where collaboration will go into the future, and whether it is integrated into ERP systems or CRM systems, you're going to need to have this collaborative communication, peer-to-peer, end-to-end, between things, between people, and between people and things as well. This is, I think, where the market is going to go in the next few years.
Yeah, no, I definitely agree. And it's funny that you bring up Zoom. So I actually had a good friend of mine started working for Zoom, I want to say like 5-6 years ago. And I remember him telling me about it. He goes, yeah, I'm working for this video company. And I was like, dude, we were fresh out of college. And I was like, man, that sounds kind of cool, man, but I don't think that's going to be a big thing. Fast forward, now Zoom is like one of the biggest companies out there. But so let's kind of switch gear. You touched on the Salesforce acquisition of Slack. So let's focus in on that. How do you see that playing out? So you mentioned Microsoft Teams, and we're pretty familiar with Google Workspace. How do you see this acquisition of Slack melding with Salesforce? Do you? I guess the question here is, do you see Slack kind of staying on its own, or is it going to be fully integrated into Salesforce, or what do you think is the play there?
I think it's going to be a mix. We know the folks from Salesforce because they did acquire one of our companies a while ago. It was called RelateIQ, and they were doing the next generation CRM, right. More dynamic, more easier to use than CRM. One of the main problems of a CRM is it requires people to manually enter the data and to continuously add it and modify it, which is a hassle when you think about salespeople and short span that they have to go and keep doing it all the time. It's against the kind of normal behavior. So what you are seeing is you need to take the capability that Salesforce has or had and add new novelties to it, whether access through mobile technologies or not requiring data to be manually entered by knowing your customer, your clients, and then be able to absorb different profiles from the industry, from the links, the kinds of LinkedIn or social media or anything that is available on the web about a particular user, and manually build a profile that can fill your CRM. So in a way, you can build your relationships in an automated way using all the information that's readily available out there. So I think Salesforce over the years, and when you go to the Dreamforce conference in San Francisco, it's a huge one over a week, you see a huge number of Salesforce partners, small companies that they have either invested in or they have them as third-party vendors in their ecosystem, building essentially linkages with the core feature set of Salesforce. And that's how traditionally I think Salesforce was able to grow and have a lot of resources and capabilities through their partners. And at some point from time to time, they like to acquire because they need to get this innovation to get them into the next level. Just like what they did with RelateIQ, they paid a decent amount of dollars at the time to do that. I think over the years, they have acquired multi-billion-dollar companies in some marketing, in some lead generation companies. And now I think they are getting into this collaboration. Think about Microsoft a couple of years ago when they bought LinkedIn. I mean, they needed to have all their enterprise productivity tools map into human beings and profiles. And that's what the LinkedIn acquisition gave them. I think when you look at Salesforce, they need to get bigger into the enterprise with a diversified platform and offering beyond the CRM. And I think the collaboration world is one which is becoming a must, just because business will be is conducted now and will be conducted in the future in a virtual, in a remote way. So they have to figure out a way how to take the key CRM capabilities and in a way make it portable or make it peer-to-peer or make it available to smaller customers or even individuals. And maybe one of the ways to do that is to use the Slack as the glue. I believe in the short term, probably for the next X number of years, they'll take some capabilities of Slack and integrate it with the CRM, but they would leave Slack as a separate standalone business because there is a real multi-billion-dollar business just by doing collaboration.
Right.
And they build more functionality on top of it as well.
Yeah, no, I totally agree with you, and it is interesting. We're seeing this kind of mad dash for collaboration. So I know Microsoft Teams has been out for a little while, and it's funny. What was it? A month ago, 2 months ago, that G Suite rebranded to Google Workspace, and their whole thing was more collaboration. So it is really interesting to see Salesforce kind of dip its toe. Well, I don't know if we can call it dipping its toes I think this is the largest acquisition Salesforce has ever made, but with Slack. But as moving forward, I like what you said there, where they're going to keep it kind of standalone. What do you think are going to be those main features? If you had just had to guess that they're going to start integrating within Salesforce, is it just going to be that? I know Salesforce has Chatter. They have, is it just going to be able to talk about deals, or how do you kind of see those first steps progressing?
I would say that the first step will be to connect the sales and marketing folks together, because those are the main users of a CRM system. So you need to find a way to get them into a network so that they can collaborate. And then when you collaborate, you can close transactions. So I think that is going to be the main thing is now that people are not traveling or not having face-to-face and more transactions can be done remotely, let me try to connect as many people as I can through a system like a Slack, give them all the capabilities to keep talking, whether on specific topics or specific transactions, and be able to do that and build those virtual relationships. Instead of a Rolodex, essentially you're having an automated Rolodex in a live session. I think next step might be to build kind of video capabilities and things like that. So you will be able to have this client-customer relationship over an automated media. And when you think about the capabilities that new technologies like a 5G network will allow you to do, it's going to open up capabilities. to do more things. It's going to open up capabilities to run transactions and software at the edge. We're in the 5G network itself, close to where the user is. So once you start having a lot of smart and a lot of intelligence running close to the user, close to some on the network and some in those data centers that are run by Google and GCP and Amazon and AWS and Microsoft, I think you have a data center, you have the edge, and then you have the users, and you have processing running on all of them, and you have data that needs to be stored as close as possible to the user as well. And in order to continuously move data from one to the other and collaborate, you need a glue, a middleware glue that could do that. And maybe Slack could be that glue. They have a certain functionality today, but they will grow into something much more, because today they are connecting together a variety of systems. They allow you to use whatever documentation and rich media and even videos and send it along in this whole channels. So you're going to have to think about those channels as becoming more dynamic, more rich, and how they would evolve. And it becomes like a separate collaboration session by itself on each one of those channels. But the more you do that, the more you connect people together, people that are all over the world, and there are billions of them. And step two will be the things, because if we have today 10 billion people on Earth, or soon will have, you have maybe 50 billion devices that will be connected. So at some point, it will be important to connect those devices and give the users access to those devices. So there's a huge connectivity that would need a system, a software system, and whether it's Slack or something else, I think it's the beginning of this overall connectivity.
Yeah, no, and I completely agree with you. I like that piece about 5G. I think that's going to start changing a lot of things, because I read this was a while ago, but I think like the average person has 5 or 6 connected devices. So kind of that whole idea of connectivity and being able to integrate everything. And I think with Salesforce acquisition of Slack, I like what you're saying. They're trying to plug in that, making people be able to talk to each other. And I do agree that first step is going to be sales and marketing speaking together more quickly. And maybe there's an integration where it's going to be right there in Salesforce, where you can it's easier to talk about deals or whatnot. And I can definitely, as a salesperson, see a lot of value in that, because sometimes you gotta it is kind of difficult. You gotta ping someone about a deal, and then you got to go to Salesforce, and so it'll be nice to have that all in one place. But kind of switching gears here, we're talking a lot about connectivity. We're talking a lot about kind of the future technology, and we touched on briefly in the beginning of this talk about kind of what you guys are looking for when Sway Ventures invests in a company. But I kind of want to dig into that a little bit deeper. What are kind of the, what's the phrase I'm trying to use here? What are the the flags that pop up when you look at a company and say, hey, these are the the 1, 2, 3 things that we look for in the companies that we invest in?
So first, for every fund that we raise, there is an investment team that is built in when we go to investors and say, we want to invest your money in those areas. So the first filter for us is really those 4 or 5 sectors that we want to try to focus on: enterprise, fintech, health IT, transportation, logistics, some consumer applications. Second, we say, okay, it's mainly software. We want software companies.
Right.
So we have this lens already that acts as a filter. But then when it comes to an opportunity with an entrepreneur, it's really the team. You start really by looking at who is the team. Have they done it before? Is the idea novel enough? Are they solving a big problem? And then what's the size of the market opportunity? But we know that every pitch deck that we receive and every pitch that we listen to, over the years, the business will change, because you have a certain assumption about the market and you're building a certain market, but then you go and test the market. You're going to find the market is telling you either keep going in this direction full speed, or there isn't too much of this with the offering that you have. You need to tune it and go slightly in a different direction. So it requires the management team to be flexible enough, to be open enough, to be able to recognize when there is enough resistance when they need to pivot and change. So I think you look at the management team, if they have done it before, if the way they are thinking, whether it's creative or not, because at the end of the day, they're going to find resistance along the way. That's by nature in creating companies. You're going to get resistance at some point. How would you behave, and how would you behave to overcome the obstacle, either by going on top of it or by going around it and retuning the company and retuning the management team and the skill set along the way. So the team would be, I think, the first one. So it's the entrepreneur himself, the founder or herself, and whoever is behind them. The second, it would be how difficult this problem is to solve, because the intellectual property is really the differentiator. In any case, you have multiple companies building solutions for the same problem. The question is how unique the solution is, how protected the team has, whether they have patented the technology or not, and whether the technology, if the market doesn't pan out, whether the same technology can be leveraged and used in a different direction. So I think it's how strong is the technical solution is and how portable that solution is. Specifically, when you look at key vertical or a solution for a very small vertical, you say, okay, if this vertical doesn't pan out, my risk is higher because frankly, I'm stuck with this solution, let's say an accounting package, well, it only does accounting. But if you're looking for an enterprise solution like a Slack, which is a horizontal solution that is used in any kind of vertical market, well, you know, if it's not used in a fintech, it might be used in health, it might be used in manufacturing, in engineering. So horizontal technologies give you less risk, and there is more appeal to it because the market opportunity is much larger, in which case the valuation would be much larger down the road. So those are the few things. I mean, it starts with the team, and it ends with the specific technology that the team has generated, and then the addressable market and the size of it.
Yeah, no, and I completely agree with you, and I totally see where you're coming from. It always matters about, you know, the team, who's leading this technology, and I think it's to people who maybe aren't super used to, you know, venture funds or that kind of stuff. They always think, no, it's the technology, but I agree with you. The team has to be there. They have to know. You could have the greatest technology in the entire world, but if the team doesn't know how to execute, that's when you run into problems. Something interesting, you know, that you talked about earlier when we were talking about connectivity, and we're talking about the funds that you look at. Do you see Sway Ventures, you know, moving more towards the security sector as we're increasing in connectivity, and you know, there's all these devices? Now there's going to be more security layers that we have to add. Do you see that there's going to be a spike in security investments, or how do you see that playing out?
Well, cybersecurity has been a hot market for several years. I mean, there's more than 5,000 startups in the security space, and it is a key component in IT, where there is a lot of investments from IT managers. One, because more and more of the data is stored in either your own database or on the cloud. More and more of your business is transacted over your digital infrastructure. So you have to find a way to secure almost everything. And
right.
the content, the data is really a mine for hackers to come in and access it, because that's how they would make money and extract money from it. So the more transition to the digital and the cloud happens, and it has been happening for the last 10 or so years, and it will continue to accelerate even more, it's going to attract the bad people to come in, because it's a minefield that they can extract some nuggets and monetize it. And you know, it's an industry that's well known. The hackers, a lot of people know who the hackers are. And so I think the cybersecurity market is a market that will continue to evolve. It's going to be an investment area for quite a while. The interesting thing is every time you plug a hole, there is another hole that shows up, which requires a different set of solutions. And on the investment side, we continuously look for those solutions, and they are becoming smarter, as you can imagine. We started maybe 30 years ago or more with antivirus software on PCs and laptops, and over the years, companies have grown out of different areas in threat management and network infrastructure, cybersecurity, now trying to guess where the hacks or the exposures might come from and protect preemptively against it. So I think as there are new technologies that are deployed, and machine learning and artificial intelligence, all of those are being deployed in cybersecurity offerings as well. So for us, we have invested in a few companies in that space, and we will continue to invest in those. The trends are clear. More transactions will happen over the internet. More of your financial world, more of your lifetime secrets is going to be on the network. And at the end of the day, there is not going to be any secret left because everything is really on the network. So you need to be able to protect it as much as you can. And to do that, the cybersecurity world will continuously evolve, moving from the on-premise solutions into the cloud and into the Internet of Things, where devices also would be storing some of your information or getting some of your information, how you protect them as well. So you go from billions, tens of billions to hundreds of billions of things that you're going to need to secure and protect. And this is the opportunity really for the cybersecurity space and the industry to continuously evolve over that.
Yeah, definitely, and I can definitely see how it's changed even just in my lifetime. I remember, like you said, 15, 20 years ago is just you just had your antivirus software, and maybe you'd get an email, someone saying that they're a prince that has money in escrow, but it's definitely evolved and it's really changed. And I see every single day, partly because I'm in the security space, but all these ransomware attacks happening now. When you look at investing in companies, is part of your due diligence looking at, do they have a security, do they have things in place to make sure their data is secure?
Yeah, definitely. I think that's part of it, because most of their intellectual property and their customers' data somehow will be stored on the network. The security aspects are critical, are fundamental. So yeah, definitely. I think whether they use Amazon or they use Microsoft or they have extra layers of security, that becomes part of the due diligence, definitely.
Awesome. And I know we're running up here, and I really appreciate all the time that you've taken to speak with us about this. Is a fantastic conversation. My last question for you, what do you think is going to be, and this is kind of a broad question, but what do you think is going to be the next game changer? What's the next big technology, or what do you see things that are really shaking, movers or shakers right now that, you say, hey, this is going to be, this time next year is going to be the hot thing?
It's difficult to predict that, because there is always a black swan that comes along and then takes the industry in a different direction. I mean, who would have thought 20 years ago when Google came about, it was about search, internet search. And if you remember, in the late 90s, there were several companies in that search who made it, and a lot of them disappeared. And then Google came along and did the internet search and cloud search, and they turned the advertising business on TVs and paper and into digital, because they can give you the analytics, they can give you the intelligence, and the rest is history. But who would have thought also Amazon would change from reselling books into becoming who they are today, Amazon. They sell anything, and they can get it to you anytime, in a split second, in a day, or in an hour. I think moving forward, there is going to be more of this. There is going to be, I think, this 5G network or 6G or something like that is going to make the network, the way we know it today, obsolete, and will allow you to offer new services, much more powerful services at your fingertips. The devices that you have in your house. I mean, I'm sure all of us are having a small network in our house. I know from myself, you have maybe 20 or 30 devices at the minimum, between your TVs, between your laptops, between your mobile phones, between your Google, Hey Google, or Hey Alexa from Amazon. All of those are live components in a network. Even your, actually, we recently have been using a vacuum machine. I mean, you talk to it, it's connected to the network, it moves on its own, it's robots. Really? There is going to be more of those, the home delivery equipment or groceries. So I think it's going to be a mixture of those automation. The key theme here is things will be more and more automated. So get used to it and be able to inject the human preferences into devices so that the devices know what you expect from them and then be able to deliver on your expectations. But it's going to go from the autonomous cars into anything else. More and more automation in the office, in the home, and as a way of living, more digital connectivity and remote connectivity. And that is going to open up really the world on itself. It's going to make it more flat. And I think, I mean, a few years ago, there was a book, I mean, the world is becoming flat, or the world is flat. It's going to become even flatter because I can connect with people in Asia over social media or any media that I feel is appropriate. And then I can transact and they can transact with us in the same manner. So I think it's open borders that's going to allow more and more opportunities, virtual teaching and things like that. And, you know, it will translate into better productivity at the end of the day. Resources that are available here, suddenly I know that on the other side of the earth, there is a need for those resources, and I can get them there in a split second or in an efficient time, in an efficient way, at a cost-effective way. So I think that's gonna, the whole automation is gonna create more and better productivity for humankind.
Yeah, and I definitely agree with you. I mean, I use a lot of automation. I've been a part of a lot of companies that, you know, are very automation centric. So I totally agree with you. And I think that is definitely a good thought, that we're going to trend more and more to automation, making things easier. And like you said, being able to connect with people on the other side of the world in an instant. I mean, you know, you just like you and I are talking right now. I mean, we could be on, I could be in Australia and you could be in Canada, and we could still be having a conversation. So no, I definitely agree with that. But you know, I do want to be conscious of your time. So we're kind of wrapping up here, but Najib, I really appreciate the talk. This has been super insightful. I'm really excited to share this with, you know, that everyone was able to join today and hear this. But any closing thoughts, anything you'd like to add before we, you know, sign off today?
I would say it's a great time to be in the technology industry, to be in the software industry, because I think this is an industry that is going to recreate itself and regenerate itself continuously. And I hope that it would be an asset that would be used for good causes around the world. Because if used in an inappropriate way, it could also hurt. I mean, you think people can have robots that think about themselves, and artificial intelligence that can turn itself into a human being. There might be some of that. So hopefully there'll be enough of civic feelings and knowledge so that people can use the technology in the right way. But it's exciting for everyone in this industry and around the world to keep consuming this kind of applications, because at the end of the day, the purpose is to make life better for more people.
Definitely. I totally agree with you. And that, you know, and that part about, you know, AI, that's why I'm always nice to my Alexa. That's why I always say thank you after I ask a question, just in case, you know, once, you know, maybe if they become sentient, I can say, hey guys, I was always nice to you. So, you know, be nice to me. But Najib, again, thank you so much. This has been a fantastic talk. I really hope that we can find another time to speak again. I think you and I could probably talk for hours, but I'll be conscious of your time. But thank you so much for this insight, talking about Slack, the acquisition with the Salesforce acquisition of Slack, and just technology in general. It's been super eye-opening. So sincerely, thank you so much for joining today.
Thank you, Dan, and hopefully we will host you at our Sway Venture offices when the time comes and things open out. Look forward to meeting you face to face. Thank you.
Yes, sir. Yes, sir. Thank you so much. Have a fantastic rest of your day.
Thank you.